All right, let's talk about a really interesting setup in the AI hardware space. We're looking at Aehr Test Systems, ticker AEHR, and wow, did it just flash a massive signal on the charts. This is a potential trading opportunity that you're going to want to see, so let's break it all down. So picture this, right? One day, the stock is an absolute rocket. It blasts off 27% on some pretty game-changing news. And then, literally, the very next day, it takes a nosedive, plunging over 12%. You know, that's the kind of whiplash volatility that can make a lot of people nervous. But for us traders, that's exactly where the best opportunities are born. So the big question on everyone's mind is, was that pullback a bull trap or was it a golden ticket? Is this a huge warning sign telling us to stay away? Or is it basically a gift-wrapped second chance to get in at a better price? Well, the answer, as it often is right there in the charts, and we're about to decode it together. Okay, so let's get into it. This is where we really dig into the price action and find the clues. The chart is our map, and it's going to tell us everything we need to know, where to get in, where to set our stop, and how to navigate this whole thing. Okay, check this out. That pullback didn't just stop on a dime for no reason. It came down and bounced almost perfectly off a critical support level at 28.90. That is a huge tell. It's the market saying buyers are stepping in right there. Now below that, our major safety net is the 50-day moving average, way down at 25.02. And if we look to the upside, the first challenge is to get back above 33.85, with the big prize, the 52-week high, sitting up there near 37.50. And you know what? The secondary indicators, they're basically confirming this whole idea. The RSI has cooled off from that overbought territory, which is super healthy. And here's the kicker. Look at the volume on the sell-off day. It was actually lower than the breakout day. That tells me this was likely just profit-taking, not big institutions dumping their shares. It's pretty much the perfect recipe for a bounce. All right, so we've analyzed the chart. Now for the fun part. Let's turn that analysis into a concrete, actionable trade plan with very specific numbers. So here it is, our game plan. We're looking for an entry in this sweet spot, somewhere between 28.90 and 29.30, right in that support zone. Our stop loss, our protection, is down at 25.50. And our targets? We're looking at 33.85 for the first one, and then a potential push all the way to 37.49. And this is why this trade is so interesting from a numbers perspective. Just to get to that first target, the math works out to a positive 1 to 1.2 risk to reward. That means for every dollar we risk, the potential reward is $1.20. That's the kind of edge we're always looking for as traders. But wait, it actually gets even better. If the stock has enough juice to hit our second target, we're looking at a huge 1 to 2.2 return on our risk. That's a potential 28% gain versus about a 13% risk. I mean, that's the kind of asymmetrical trade that can make your entire month. You know, a great chart setup is like a fast car, but it needs an engine to go anywhere. So now let's look at the fundamental story, the catalysts that could drive this thing higher, and just as important, the risks that could get in the way. So, on the upside, the big catalyst is a confirmed production order from a major hyperscaler. We're talking one of the giants in cloud computing. That is a massive deal. But you gotta look at the other side of the coin. The company isn't profitable yet, its stock is really volatile, and there has been some recent insider selling. So yeah, it's a classic high-risk, high-reward situation. So when you put it all together, the powerful story, the clear technical setup, that favorable risk-reward, it really does scream as a textbook buy-the-dip opportunity. This is exactly the kind of high-probability setup that traders are always on the hunt for. Okay, before we wrap, just the usual friendly reminder, this is all for educational purposes. It's not financial advice. Trading is inherently risky, so you have to do your own research and trade responsibly. All right, that's all for this one. Go find some smart trades.